Traders, welcome back to another Relentless video. In this one, we'll be talking about those support trades, man. We love the breakouts, we love scalping, but at times the breakouts are killing us. At times we're seeing double tops, triple tops, false breakouts, rejections, everything else that comes along with the risk of buying high. We sometimes have a hard time getting in for those higher levels, man. So today we'll be taking a look at those key support trades, and not dip trade, right? Because I think there is a difference. I believe the dips are more so a quick drop and pop versus the support trades being a more drawn out trade at the lows, at the key levels. So guys, if you are enjoying the content, be sure to hit that thumbs up button. If you're a new viewer, watch the entirety of the video and then consider subscribing. If it's something that you like, be sure to hit that subscribe button, turn on the notifications, and let's jump right into it. All right, guys, when we talk about support trades, the first thing we'll want to know is how to identify key support levels. So that's the first thing that we're going to look at here in the video. Now, NKTX will be used as reference, as we did take a support trade on this stock here today. Now, where are the levels that we want to be looking at, right? And we can even start as far back as pre-market on most days. You know, when we look at our 1 minute, our 5 minute charts, we can look all the way back at pre-market, and we can come and map out these key high of day levels. Now, pre-market highs around 710, that was at 1333. Now we can come and put a trend line up here and clip that level. We'll see when the stock curled back up over time, it came right into that level at the penny, right? So when we talk about resistance, support, and then support becoming resistance as we break through the level, it breaks the level right here and rips up and makes some new highs. So that was pretty good to see. And we created a pre-market high at the time of 1573. So we can put another trend line in there at 1573. Let's bring that on up. Come over to the high of this candle. Not too bad, right? So high of day, then it rips up, right? In the first minute of the day, it rips up and absolutely rips through that level there of 1573. We got a high of 1598. Break of 16 was the next level, and from there we'll see that it had some trouble. It came back down and started to consolidate where at the VWAP, guys. VWAP is also another big area, a big place where we'll see a lot of stocks finding support. Now, what I like to do is use a combination of these key pivot levels, and you'll see I'll mark out most of the highs that we have throughout the day, and along with the VWAP, we'll see how in some situations for the examples that we'll look at, that the stocks are sometimes coming into play in the range very well and holding the key level, right? So whether that might be the previous high or the VWAP or both of them combined. And so look at NKTX right here. It did come back down in this area here to the VWAP, but we'll see that when it came down, it was from a big drop off around 1016 right here. It came down from a big drop off. This isn't the type of area that I'd be looking for a trade off the lows, right? It's a very specific situation, and that is that we have to have increasing volume, and it has to be a clean 5 minute pullback. So we'll look at our 1 minute chart, and of course we'd love to see multi-time frame alignment. We'll show the 3 minute chart on the left hand side right here, some love as well, but it all comes down to that 5 minute chart, guys. In real time, this is what I'm looking at. The stock is pushing up. Let's narrow it in. The stock is pushing up, and it rips through high of day, right? It breaks through high of day. Bit of a broken ABCD here, but it rips through high of day. It gets halted, and you know, I started to ask myself, where is the next best level for this stock? And so we pull back to levels at 1598, which was our previous high of day, before ripping to those highs of 1711. So under halt resumption, and if we pull this stock up on E-Trade here around 1015 NKTX, you guys will see, here's the E-Trade charting. So the E-Trade charting will show the halt level a little bit more clearly. So you guys will see it ripped up there and had gotten halted, and you'll see as it came back down right here. I'm watching now the 5 minute chart. So when we pull over the 5 minute chart, 1015, we'll see we came right back into that high of day level right here. All right, let's move this trend line up a little bit. We came right back into that high of day level, almost to the penny, right? So when we pull up the drawing tool and we bring out the lines, let's take a look at that. We had lows right here 1593 and lows of 1590. Guys, high of day was at 15. What was the high here right here? 1585. Let's bring out the crosshairs just to be sure. Yeah, 1585. So pretty crazy. And E-Trade doesn't update properly for whatever reason. The high we'll see on Thinkorswim is actually 1598. I have no idea why E-Trade charting is doing that. Let's see if we refresh if it'll come back. This quick heads up, not to get off topic, but if you're using E-Trade, be very careful about this. I don't know why that happens. But anyhows, we come right into the penny, right? So I guess I can move this trend line on up here to 98. We come right into the penny, right, to 1593 and 1590. And when we dip down the first time is where I like to take the long. So if we put this in blue, the first entry down here is where I like to take the long. If the stock rips up and comes back down, I never like the double bottom because we usually are a little bit weaker when we retest the level. And you'll see here the third time is where it actually broke down. So keep that in mind, right? There's a couple of circumstances that have to align for the setup to make sense, right? Our 5-minute chart has to be looking good, our volume profile, and we'll look at the volume over here at Thinkorswim. High of day volume at the time, we had 5.5 million shares on a 5-minute candle. And as we come across, we'll see volume is a little bit lower on our pullbacks, right? Volume is a little bit lower as we bring a trend line across right here. We did have a fairly high volume candle right here, but it wasn't too bad, right? Compared to high of day volume, we had 3.3, right? And high of day volume at 5.5. So it wasn't bad volume, right? It could have been a little bit lower, but it wasn't bad. So as we pulled back into that previous high of day level, that's where I took the long. And you'll see VWAP is all the way down here. So at times the stocks will pull away from the VWAP. Look at this. It rips away from the VWAP. And so, you know, we start to look for different levels of support, right? So let's take a look at that video real time. Let's pull over the YouTube stream and jump right on it. I'll even remove my webcam for now so you guys can see real time, you know, how it's playing out. So I'm actually red on the stock on a scalp trade on that resumption, and I'm watching it right here. It's coming down currently at 1620, 1606. Some traders will already be in 1605, 1608 right here as we get that quick dip. But I'm watching, I'm waiting. I want to see it confirm and hold the level. And there are days where I do miss trades because I'm not in there that quick drop right away. You'll see it hit 1602. Right here, I'm thinking about it. There's 97, there's 95. I'm watching and I'm taking the long as I'm seeing buying volume coming back into the stock. So we're hitting the bids right here, right? I know the red is a little distorted on this video, but we're having sellers hitting the bids. So they're selling at or below the level here of 1602, bringing that price lower. There's 94. And then right away we see some buying on the ask. So traders are buying up that low. And you see the price surging back to 1610, 1611, and so forth. And I'm like, you know what? I'll take the long in between the spreads. I got in with a market order right there. I'm long 300 shares at 1603. And the day was a very choppy day today, right? This is April 25th, 2022. It was a very choppy day. And so I wasn't looking to be aggressive on the entry here. I'm red on the stock. I reduced my expectations on the day tremendously. And so, you know, I'm not in with let's say a position 800 shares, 1,000 shares, 1,500 shares. I'm going easy right there and then looking for that bounce back up. So you can see I'm in at 03. I'm expecting the 1 minute candle to make the new high eventually. And then I want to see this stock curl all the way back up here to levels of 711 and 1711 and so forth. But in doing so, I'm watching at it, and you know, I'm in on the ad. I added for the 1 minute candle to make the new high right here, right? I added, and I ended up taking both positions off the table, right? It was a better breakout than I would have expected at 35. The volume absolutely ripped in, and I sold at 43, right? Going from red to green, and guys, it's a pretty solid trade. Now I'm in at 1603. And I'm unwinding the trade here at 1643. There's 40 cents. If you're in this thing with 1,000 shares, $400 right there, right? So in most situations, I would want to hold the stock longer, right? We are getting a bottoming wick right here. We're getting a bottoming wick. We're making the new high. We would expect to see the stock continue. But I ended up taking the entire thing off the table because I told myself, hey, it's been a bit of a choppier day. So this trade, I didn't see it out fully. But I told myself, hey, it's a choppy day. Let's take the gains and run with it. So I ended up coming out there. So a quick bounce off of that previous high of day level, guys. Now the stock ended up coming down a second time. It held, and eventually it's gonna break down. So we at this point, you guys know I mentioned at the beginning of the video I don't like the second retest, and you'll see that the 5-minute candle, instead of giving that bottoming wick that we were seeing, came back down, gave back those gains that we had up there to 40, and it's back at the level. So right here we can expect that the stock will break down. Short sellers are getting aggressive, and I believe that one came a little bit lower eventually, if I'm not mistaken here. Yeah, so there we go. It breaks down over time. So that's the first example, right? Example number 2. Moving on. This is from April 19th, 2022, because last week we had some good opportunities at the lows. I'm also red on this day. I'm down $224 on this stock, and I'm watching it coming back into the previous high of day level. Well, let's say pre-market highs rather. The pre-market highs, it's coming back down. So once again, remember, I'm only taking the trades off the lows if we're breaking through the highs and then pulling back into the level. And when we break through the highs, it has to be by a reasonable amount. It can't just be by 5 cents, 6 cents. This level here is at 325. The stock made a high of 362, and it's currently pulling back a little bit, dipping down, and so I'm expecting that 5-minute pullback. Look at the timestamp on the bottom right-hand corner. It's 9:43, which means there's 2 minutes remaining in this 5-minute candle. Look at how strong it is. Look at how high the volume is. We can see that it's pushing over 5 million shares right here. So we're dipping back down, and the new 5-minute candle is about to open here at 25. I want to take this long and have a well, hold on, let me mute the video there. I want to take this long and have a very tight backstop, and see what it does. So and I'm very much more aggressive on this stock here, as I don't think the range to the downside is going to be as bad. So I'm watching. We're coming into that level of 25, 25, 24, waiting. Can we hold? How well is it going to hold? We're seeing green, and I'm long immediately, taking the entry 24 and getting in right at the penny to the level, guys. Right at the penny. Once again, we broke above the level with strength, and we're coming back down to retest it. And we're coming back down, and our 5-minute candle is not looking weak. Now, we do have a bit of a topping wick, but all things considered, this is still a pretty strong candle. So I'm expecting the new candle to hold up right here and open and start to give us that bottoming wick. So when we talk about the risk to reward ratio, it varies in the different trades. Now, for some of you, and you're going to see I took 1,000 shares off. Once again, I'm red on the day. I'm looking to lock in some gains early in case this thing does want to reject and fail. Right here, I'm looking to risk 5 cents down to 20 and see the stock curl back up there to 340, 350, and hopefully high if they at 362. Now, if you hold the entire position, you'll be in there risking 5 cents, looking to make 30 cents. So there's a huge risk to reward ratio in there, but there's always the chance that the setup does fail. And so for me, I look to unwind a little early. So sometimes my risk to reward ratio isn't as high in the trade because I'm taking profits as we're going back up. And in some of the situations, you guys will see me add back depending on the move. So it is a little bit of a higher risk maneuver when we talk about adding back. Today we're going to look at 4 examples, by the way. I should have mentioned 4 examples of winning trades. Tomorrow we'll have 4 examples of losing trades, so you guys can see what it's like when the stocks will flush down on you. I'm selling another 500 shares at 37 as it's coming back up. I'm taking another 500 shares at 41 as it's coming back up. So you can see how I'm scaling out of the trade as it's going. And right here I'm going to look to add back over the new 1-minute candle to make the new high right here. So you guys will see that I love to add back over the 1-minute high. The new 5-minute candle didn't open yet, but you can see how we're already bouncing at the level of 25. So right here, real time, I'm thinking, hey, this thing looks like it wants to get back to 60. So once we make the new high at 40, I want to add so that we can get I can rebuild my position a little bit. I already took some profits out, and look for the move to the highs. But look at what happens right here. All right, it starts to pull back. This was a hotkey error, right? This is last week. It starts to pull back. We don't quite get the move through 41, but this is a hotkey error. I was looking to unwind the position, so you'll see right away right here I'm actually out with the full amount as I flatten the trade. A bit of a hotkey error right there, which is fine, but the trade idea, as you guys will see, is working out flawlessly. Now, what did I mention? The retest of the level. Now, I know the 5-minute candle didn't open early to where it was red and came down to 25, but the way how this thing played out, this candle might have well has opened up and touched 25 already from my perspective. It happened in this green candle, but it's the same concept coming across. So the second time that we're coming down, I do not like the retest, and so I'm out of the trade. So the retest isn't awful, like it isn't awful or anything, but I don't like it. I prefer to just get in on the first trade and come back out. So this one we'll see it comes back to 24, 23. Is it going to give a bit of a bounce again? I think it did, if I remember correctly. And yeah, it does give a... So there's another 5 cents in there. If you're in at 24, it rips up to 30. There's another 5 cents. So it does bounce at the level again. Let's see how well it held. And this one got right back to high of day. So depending on if you guys are aggressive, you can take the second retest. But of course, the third and fourth is where we got to be really careful, because then we can start to break down and wash out. So let's see. Over time, am I going to come back to that stock? Yeah, well, I'm going to come back to it right there, but we can see it broke down and then curled back up. So, we're long in this area here, but, the more we come back down, the higher the risk is, right? So that's what we got to be careful with. So, guys, that was STSS on the retest of the level. Right, so we got to be very careful with how we approach the lows, but it's not a bad trade, right? I'm down $200 or so. We finally get long over here, and we make back those gains as we're scaling out and unwinding the trade. Some of you guys might be holding the entire position longer, in which case you can be up. If I held the entire thing from 25 to 45 when we got back up there, I'd have been up $500. So, it all depends on how you guys want to put your own personal twist and style on it. Some of you might be more aggressive, so you might be willing to do that. So moving on, let's come over to this one next. This is on December 8th, 2021. EFOI. Let's take a look. So this situation is a little bit different now, but same concept, right? We break through the highs, and we're having this 5-minute pullback. We're having these lows down here, but you can see these lows, it's not really coming into a previous high of day level. I made a trend line right there only because it's kind of just holding up, a triple bottom. So I'm not really too convinced at that level. But look at this pre-market pivot. I'm not sure if this was the pre-market high, but it might have been. But we're coming back down into the pre-market highs, and look at where the stock is, right there with VWAP. And pay attention to our volume profile, guys. Green volume is towering over our red volume, and so we're pulling back with less selling pressure than we went up with buying volume. And so that right there is the cue for me. I think we're gonna see a a bear trap. And so I'm watching. Oh, I forgot to mute all of the videos. So here we are. I'm watching at it, and watching this level of 380, and I'm thinking about it here. The trade looks good, right? So let's fast forward a little bit to where I'm getting long. Oh, we went ahead a little too much there, ruining the surprise. And I believe this trade I was very, very aggressive. I could have been a little bit more quick to take profits, but the way how it was playing out, man. So here we go. Right, I believe I'm going to get long at 390. Volume is coming back in. I should have been in already, considering that we've been holding the VWAP. We do have a bear flag right here, but I think it's looking good. Once again, the 1 minute might not look as good, But the 5 minute is showing us that, hey, this thing looks like a bear trap. So I'm long at 87. And look at how aggressive this red to green is. Right, boom, right up to 4. So we might have had a short seller cover right there of some bigger size. I believe I added at $4 if I'm not mistaken. Or was it 4 at the high of this drop off? Maybe 410. I can't remember exactly. This was a while ago. I took half at 408. And I believe once it holds 4, I'm going to add back. So there's 03. It's holding. I'm surprised I didn't add already. Usually when I'm scalping, that's the type of entry I would watch at. The high of this candle is 19. So I might have waited for 19 right here. Let's see. I'm in at 87. We're currently at 08. Is a great trade to this point. There's 18. How well is it going to hold and break? I'm adding right there. It's just ripping through 18. So my average cost goes from 87 to 03. Right? My average in the trade. So I'm still protected despite adding so aggressively into the move. Now, we're coming up. Pay attention to the timestamp. It's 10:02 a.m. at this time. So there's 3 minutes remaining in this 5-minute candle, and it's already giving us a bullish engulfing. It's a bear trap, and I do remember this day to a degree. I remember that I got a little too aggressive, but at the time, everything was saying to be aggressive. So I'm not upset about it. I did leave a lot of money on the table, but look at this, man. Bullish engulfing. There's 3 minutes remaining in this candle, so there's a very high chance it finishes with volume that's towering over the red candles here. And it seems like we were about 5-6 million shares on this red candle here, which was the highest one. This, I would say, was on par to get to about 6 to 8 million shares of volume. 30. Look at that, guys. Now, this is where in the trade you got to be careful. I got too aggressive holding too long. Right here, the second half of the position at 87. Think about it. I'm now up over 40 cents on that position, guys. I should be selling another half and let my cost basis come up a little bit more. If I sell that position at 87, I'm taking great profits off the table, guys. Great profits. I'm up 40 cents. Let's sell that position and then hold with an average now at 418 where I added into the trade. That's what I didn't do right here if I remember correctly. So you can see how it comes back down. And real time, I thought it was doing a 1 minute pullback to continue going. So I didn't sell. I could have unwinded at 25, 27, 23. I didn't sell the position. This is where we got to be careful on the trades off the support levels. We got to take the profits. 15,000 share buyer comes at 23. I think this thing is looking good. And I believe I told myself I wanted to see it holding above 410. But I should have had my stop adjusted at 420. We should have held 420. So I adjusted my expectations way too much for this thing and allowed too much profits to slip through the cracks. And you know what? I remember this at this time we had stocks going up like crazy. So it did influence me a little bit. I mean like 300-400%. So I wasn't willing to unwind as fast as I should have been. So over time, I thought we were gonna get the 1 minute consolidation. That's not gonna happen. So as it comes down, it comes down, it comes down. I'm leaving a lot of money on the table there, and you can see, look at that. This should never happen. So it's a great lesson here. It should never happen that we're in the trade unrealized. Let's go back some more. Up 600. We're up $600, guys, unrealized. And before the trade started, let's see, we're currently around 43. Before the trade started, let's go back some more. Before the trade started, let's see where we were at with our P&L. We were up 301 in the trade. 301. So this is a disappointing sequence of events that, we're up 624 unrealized, and we only walk away at the end of the trade with $43. Isn't that disappointing, guys? Isn't that disappointing? Because now the last position, and this is absolutely awful, the last position that was at 420, 418, I'm essentially selling at 97 for a 23-cent loss. Way too aggressive. Way too aggressive. Way too aggressive, guys. So when we're in on the lows, this is a good example, right? We learn the most from the losing trades at some times, right? Some points. Be sure as we're going to unwind. So at 30, the right thing to do would have been to sell that position at 87. Take that 40 cents. Take it, take it, take it. And now adjust my stop to break even on the remaining balance. Or even if I tell myself, hey, I had such an amazing trade to this point, I'm willing to give this last position, instead of 18, let's say 14, 13, let's say anywhere there. I'm willing to give it an extra 5 cents. Okay, 5 cents, no big deal. But there's no way we should allow the stock to come down this much to where we take such a loss on the ad, right? It should not happen. So that's a good example. They're coming out with 43 bucks, leaving $300 on the table. You can see I was not happy after that, if you guys might not be able to tell there. So moving on to the last example, trading the lows, trading the support levels. This one is another halt resumption, and this was on BFRI, very familiar stock for me. This is on December 21st, 2021. Now I do have some trades off the lows early January of this year, but I can't remember them as much. I looked through, I spent an hour looking through videos to find them because I didn't label my videos as well. But here we go, BFRI. It's coming down, and I didn't map out the level with a trend line, but we are coming down into the previous halt level. And this one is a little bit more high level, a little bit more difficult, because the flag that I was watching at, it broke down the flag, and the trend is our friend. Throughout this time, we had stocks going crazy, giving big red to greens, and we're holding up the hot levels exceptionally well and giving a curl back to the highs. So right here, our previous halt level, I believe, was around 1150. And so I'm watching this stock around this area here of 1170, and I want to give it about a 30-cent stop because I believe it can curl back up. I apologize for not muting the volume again. But once again, this one is a little bit more high level because we can see the move. Let's see, the move started from around $10 and pushed to 14, and we've pulled back to $12 right here, 1150, 1180. So we've pulled back roughly 50% or more of the move, and we need to hold that support level. So very high risk here because we can come down some more. Our volume profile, once again, we're seeing bigger green volume on the move up versus selling volume on the move down. But this one was very close. You can see very close. Very, very close. But I'm paying attention to the level 2. I'm watching to see how buyers are coming in at that level there. So I'm watching it at 78. It continues to hold mid-70s. It hits $12. This day I was very green on the day as well. You guys will see, versus the other days where I'm red and then coming green, up 760 on the stock. And then, I'm waiting patiently here. So it pulls back to 83. I take that long. My stop is at around 50. So I'm risking about 100 bucks. Well, let's say 150. Every 10 cents is $50. So I'm risking about 150 in the trade. Looking for us to hold 1150. VWAP was at 1121. I don't know if I was looking to hold that long. I can't remember. And so I'm watching this thing, man. I'm watching this thing. It starts to curl. There's 1213. We're waiting. We're giving it some time. I sold half at 1210. That is, 30 cents, right? 30 cents, not bad. 27 cents on a trade there so far, pretty good. So we're letting it do its thing. It's curling up. So once again, guys, the entry for me was the previous high of day level, significant high of day level. That was the halt resumption, or the halt price coming across 1160, 1180, plus or minus somewhere in there. So we start to curl. It's a great trade. It's a great trade to this point. Don't forget, I was up 760 before getting long. So I'm watching at it and I'm letting it do its thing. Letting it do its thing. It pulls back to 1189 right here. So I'm very close to stopping out of the trade right there. I believe I was watching break even, or at least I should be watching break even on the remaining balance of the trade. Now, for those of you watching, depending on your style and your approach, you can adjust to what you want to do. If you want to put a trailing stop, in this case, let's say, hey, if this thing comes back at 12, just to protect myself in case it flushes below the level, you can look to stop out right there. For me, I was looking to hold that position as long as possible because I felt satisfied with that move of 30 cents that I took off the table already. So I didn't mind leaving this position until break even. So I'm just watching here, and I'm going to add back at some point. Watch this right here. I started to feel very good about the trade. Where did that add come in? So I added 100 shares at 12.50 or so. Well, let's go back a little bit more so we can see it. 250. Was it there? It might not have been there. No, okay, I sold 50 shares. That's what I did. Or I guess 100 shares. My fault. I sold 100 shares more at 12.74, man. Pretty impressive. And now there's 2 minutes to the new 5-minute candle. So I'm asking myself right here, can the 5-minute candle make the new high? So we're watching. We're watching. I can't remember how this played out. My memory is kind of short. Can't remember. We finished as a green doji. Okay. So I added, as it made the new high, I added back 150 shares at 12.47 for the retest of 50 in anticipation for the 5-minute candle to make the new high. So it's coming up nicely. My average in the trade, guys, is at 12.15, man. Absolutely amazing. And this was an extremely small size. You know, imagine doing this with 1,000 shares. You know, it's really big numbers. Or 5,000 shares, 10,000 shares. Some of you who are using really big size. That's the Momentic scanners hitting over there. So let's fast forward a little bit. There's 78, 80, 92. The red to green is in full swing. The first 5-minute candles making the new high. Can we break over 13? I believe I was looking for another ad. I can't remember. Was I? Can we hold? Oh, it's holding. I'm surprised I didn't add right there. I'm really surprised I didn't take the ad at 13.04. I'm very surprised looking back at this because when I'm scalping, it's the kind of level that I do take a small position in. So it held really well there. I took another 150 shares off at 13.18. Once again, around this time, we were seeing stocks going all the way from 10 to 15 to 20 to 25. And so I believe the 150 shares that's remaining here with an average of 12.47, I held it to break even in hopes that we were going to see a move up to 14.60. But it would have been nice to see myself add at that level of 04 and unwind a little earlier. But maybe I didn't want to ruin the cost basis in the trade, so I just left it alone. But sometimes it's where it's good to have two accounts. If you can switch to a different account and take that scalp trade in there, because you know it's an extra 20 cents sitting there. But anyhow, so we're curling back up, and I believe from here is where it had a hard time. It comes back down. My entry's at 47. I believe I stop out break even. I gave it a chance. There's 50. Yeah, and I stopped out at 48. So I stopped out flat. Did I leave money on the table? Yes, because, you know, it was up an additional 60 to 70 cents. But in this situation, I had no idea where the top was going to be. And I was looking to let this entire position ride. Can the next 5-minute candle come in and make the new high again and get us to 13.50, 14.50, breakthrough high of day, halted up. And, you know, I'm the guy that's holding a position all the way down to 12.50, and I'm adding into it as it's going. So I was up 760, Much better job this time compared to the last trade. Much better job scaling out as the move is happening. And guys, compared to the scalp trade, look at how long we're in the stock. This is 13 minutes. So and compared to our trades, we're in and out within a couple seconds. It's definitely a huge difference, man. Definitely a huge difference. So those are 4 examples of trading at the lows. Some longer than others, some shorter. But I hope you guys did enjoy. When we're coming into those previous Hive day levels, I'm watching closely to see what the stocks are doing. The previous pivots, the VWAP, especially if the two are aligning. I'm watching closely. This we cannot allow to happen, man. We cannot allow this to happen. So guys, take profits. You never go broke. They say you never go broke taking profits. Unbelievable to leave 300 bucks on the table like that, man, and give it back to the market. So take profits as you go. Don't get too arrogant or aggressive or cocky or whatever words you want to use in the trade. And actually, perfect example right here. Steve is saying right here, moderator, 300 off the top, right? We would have had to take those profits, man. So yeah, that's where I'm going to end this one. So tomorrow, watch out for examples of losing trades at the lows where we have to be careful of keeping our stop tight, cutting the losses quickly. Stay vigilant, right? Turn on the notifications so you get the alert every time I upload. Guys, be sure to hit that thumbs up button. If you are a new viewer, consider subscribing to the channel. I do appreciate it. Right now I'm going to go work on the recap, so I'll head out. Take it easy, guys. Stay safe, stay green, stay relentless. I am, of course, signing out.